morning everyone, this is Amit Pabari, founder and managing director of CR Forex. In today's presentation, we are going to cover two aspects. First, why did rupee move from 83 to 83.50 kind of a level? Second, what is the way forward for rupee? If you see the chart, rupee volatility is at 15-year low and we are expecting volatility to pick up and rupee to appreciate. Instead, rupee had given a googly and instead of appreciating, it got weaker. The main culprit was Chinese currency, because of which all Asian currencies got weaker. Chinese currency was trading at 7.21 kind of a level on Friday morning and it closed at 7.27. Once that central bank said that they are going to reduce reserve requirement, apart from that they have not intervened by selling dollars in the market. As a result, most of the Asian currencies got weaker. South African rand and Korean won got weaker at the highest level. Now the question is whether this really is sustainable or not. To answer that, what we do at CR Forex, basically we try to understand whether the move has happened because of any fundamental shift or whether the move seems to be a permanent shift or not. To answer that, we ask few questions to ourselves, whether the move has happened because of any geopolitical tension or any financial crisis or any negative global bad news. If that happens, then few asset classes will react. तो अगर ऐसा कोई बड़ा क्राइसिस है तो उस टाइम पे गोल्ड ऊपर जाता है, 10-year बॉन्ड यील्ड ऊपर जाते हैं, डॉलर इंडेक्स भी बहुत ज्यादा ऊपर जाता है एंड इक्विटी मार्केट करेक्ट करते हैं. Now if you see the table, dollar index have moved up by 0.5% or 1%, but डॉलर का yield जो था वो गिरा close to 2.33% in 1 week's time. So basically it nullifies the impact. Equity market across the world were positive. Gold was also stable. This all are indicating us that probably this move is a temporary move and within few days we can expect the pair to settle down. Now the second reason why we expect the move to be temporary one, because we expect RBI to intervene strongly. Now why and how RBI can intervene at the current juncture, let us understand that. First, RBI can go and sell in the spot market or in the future market. Second interesting point is that RBI also have a positive forward book currently. In the month of October, they were short by $14 billion. In the recent month, now they are long by $9 billion in the month of January. And average price what we are expecting they must have bought is between 82.90 से लेके 83.10 के आसपास पे. So at 83.40 they have a chance to intervene by selling the forward and book profit before the year end. Third, apart from that, RBI can also intervene by verbal action or by taking any kind of action. For example, in the month of August 2023, they did not allow the bank to take arbitrage position in NDF and result in rupee got stronger by 50 paisa on a single day. Now let us discuss outlook for rupee. Honestly speaking, the move has been a surprising one, and at this point of time, saying with 100% confidence that the pair is not going to move towards 83.70 or 84 seems to be little difficult. But looking at other asset classes move, especially 10-year US bond yield and the kind of reserves what we are holding, we can be reasonably confident with a probability of 85 to 90% that 83.50 to 83.60 is going to act as a strong resistance for the pair, and gradually rupee is going to move back towards 80 to 80 से लेके 83 levels by 15th of April. For the coming week, it will be a short trading week with 2 holidays. Generally, in the last week of March, IT companies come and sell dollar, which can also support rupee. Weekly range for the pair is 83.10 on the lower side and on the higher side 83.55. Let's discuss strategy for thin margin exporters like agri exporter or chemical exporters. Most of them are taking costing near 82.75 or 83 kind of a level. In the NDF, rupee has closed close to 83.60. On Tuesday morning, we expect the pair to open near 83.40 kind of a level. Any level above 83.30 seems to be a good level for them, and definitely they should book 100% on a back-to-back basis. If someone wants to wait, they should keep a strict stop loss of 83.10. Now let me discuss strategy for thick margin exporters like textile exporter or engineering exporter. Generally, all thick margin exporters will go and book long-term forward contract. Let me show you an interesting data point. If someone who had booked a forward on 1st of Feb 2024 when the spot was close to 82.96, and if they had booked forward for the month of January 2025, they would have got a rate of 84.47. Interestingly, if someone had done the same thing on last Friday, they would have also got the same rate of 84.47. Basically, the spot has increased, but the premium have drastically fallen down. Now let us discuss strategy for them. On Tuesday morning, if the pair starts trading below 83.25, and if you observe that RBI has intervened in the early morning trade, then ideally they should go and increase their hedge ratio. Basically, on a confirm order basis, they can take the hedge ratio close to 90 to 95%, and on anticipation basis, they can go and take the hedge ratio towards 70 to 75%. Now let us discuss strategy for importers. As a major view of the pair was on the appreciating side, that is why we suggested importers that they should only cover 50% of the imports which are due for next 15 days. For remaining, we suggested them that they should keep a strict stop loss of 83. As the move was on a rapid fire note, most of the importers must have missed the stop loss. For them, they should follow the following strategy. For immediate payments, they can take buyer's credit. If you are taking new buyer's credit, then for that buyer's credit, the stop loss is 83.75. If you have any unhedged position till 15th of April, for that you can keep a stop loss of 83.60 and wait for lower levels of 83.20 to 83.30. For payment beyond 15th of April, let us wait for 1 week before taking any aggressive call. With this, I will end my today's presentation. Jai Hind, Namaskar. फिर मिलेंगे next week. Thank you.